Good morning, everybody. Welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionFit.com. With the morning vol report, check out our maximizing profits. We still have space left in our webinar for Saturday, although, my gosh, so far it's our most popular webinar to date as far as signups go. So again, understanding a lot of the vagaries of how option trading works on a really short-term basis. Also hedging, putting positions on, reading volatility and what it means in the very short term. If you want an idea of what it will be like, take a look at our webinar. You can just go to our blog. It's free, and this is our webinar on our basic. It's kind of like an intro webinar to weeklies and the concept of accelerated decay on the weekly cycle. It's about an hour long. And with that, we've got a little love in Facebook this morning. It's been a while. It's a stock that Mark and I like. But all of a sudden, it just, after all that great earnings, it's, again, suffering a little bit from the success and stock rallying syndrome, and that has really slowed down. So while the premium in here is dirt cheap, we've gotten a little bit of a lift on it lately. The big question is if it can maintain the pace or not, if it can kind of resume its market. And if you look at Facebook, and then let's look at some other, you're kind of seeing the same thing. Right? A lot of, like, let's say, big technology. We go and look at Google. Right? This has been the VIX killer, right? Google's not moving. Facebook's not moving. I think we've gotten a little bit of movement out of Apple, but a lot of the stocks that have led the market have stalled, and the rally stalled. So they're talking about more possible rate hikes. That's stalling things. The only thing really that has gotten us moving has been oil, because it's made a huge move. So, yeah, I know, huh? That's good. It still looks like they want the stock to go up, but we'll see how long it lasts. We might have to close our time spreads. Anyway, as far as we'll try to look at some more names. We looked at some plays like an AT&T, Verizon. It looks like a lot of the big dividend-paying stocks have sold off. It's a subject that we had last week. How far they go down? So basically, we've the market flatlining, and a lot of things that brought us to this higher level are coming back a little bit. So either cheap put time spreads, put calendars, put butterflies, anything like this. And we're trying to generate a little bit of positive theta, but still kind of keep this downside direction. And then look for some very inexpensive upside calls. So I think as far as this goes right now, you're going to look for individual names that are moving, or trades that are just going to take advantage of a flat market. Because just at least for the last couple of weeks, we've really stalled. So we take a look at VIX. It opened higher this morning. Let's take a look. It was marked down pretty well on Friday. Look at the 5-day chart, right? We had a little, and then it basically spent what it's done all day doing. After the Fed, all we've had is little pops and vol, only to get back to 1140. So today, again, we're not moving very much, but with stocks down, VIX will mark up naturally. And with the weekend, that's what we've got. So if on a Monday, when we have, I'm not going to say there's really bad news, but there's really no good news. There's no market drivers. If VIX can get anywhere close to where we close on Friday, if we get back to the 11 handle, I think that will be kind of the symptom for the week again. There's some, I think Yellen is speaking at Jackson Hole, but it's hard to expect a lot out of it right now. The only thing really looking for is, like I said, we'll look at some forward-looking things, more contango plays, but they need, let's say, a month timeline. Just the shorter-term stuff right now, we're kind of bumping up against it. Even the pops and volatility, when they happen, they haven't really been lasting long. I think we just get say back to 11, then what? We're just stuck at that point. I don't know if there's really a trade there. We can't get to lower. We can't break 11 until the market breaks new highs. Right? Just by the nature of VIX, you need to be pushing higher. We need to get to lower volatilities up high. And right now, the at-the-money volatility, the 218s, this is 1030 on a weekly basis. As we push up, you push up into slightly lower volatilities for the at-the-money. That helps push VIX down. So you need that driver. Right? So 220 means 11 VIX or lower. That's really what can push that cash down. I'm saying if every Friday or every Monday, every morning we have the same pattern, the market kind of doesn't look like anything, and then it spends the rest of the day rallying, and then VIX falls apart. Again, without catalyst. So sideways markets, I think places for opportunities are, we'll still look for low vol. I think we should start looking as far out as December. Also, a lot of those big dividend-paying stocks that are still sliding, there might be some opportunity there for some short plays, but positive premium type. And because the contango is so huge right now, looking down the line at any kind of vol pair going out to, let's call it September, maybe even October. All right, and with that, that is our vol report. We just still have a lot of sideways. That is the bottom line. All right, everybody, I will see you all shortly in the option room, option pit chat room. Mark wife had his baby, so all is good there for anybody that wants to know.